location and be up and running. Well, COVID has proven that we don't need disaster recovery offices anymore. So there goes a bunch of office inventory because now everything is being done by a laptop. We don't even need to go have that secondary office.
You're absolutely right. Yep.
Yeah, I just think that, I think an office is going to come back. I think New York office is going to evolve. Sure, a lot of those buildings that exist now will not be, in the same owner's hands once this cycle ends. But if you think we're about to start closing the Empire State Building and One Vanderbilt and some of these other properties, I mean, I'll go ahead and say it, you're crazy. That's not going to happen. That's just, I can't use the word guarantee because we're not allowed to use the word guarantee, but I guarantee that's not about to happen in the near future.
I'll qualify my long-term optimism for real estate by saying that all these charts we've seen, they look awful.
I was going to say that too.
And for a lot of these companies, it's been quite the fall from grace. A company like Highwoods, which for over a decade always had a premium. They were a fantastic operator. They run their suburban office properties, unlike a lot of other suburban assets. Turtle, you and I, we keep going back to this, that within the real estate crowd, and the real estate as a subsector is a lot more, even with all the incremental generalists, the hedge funds, the momentum traders. You've always had that REIT mafia. You've always had that long-term dedicated capital, but I think it's also created a certain type of mindset where you have relative valuations matter, absolute valuations matter, spread to triple B yield, spread to all these different considerations that people have seen forever. And we're in a time when we don't have high quality transactional comparables, and we really don't know what the cap rate is. And we hear all the stories of CapEx and blah, 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 and you have leverage, right? 30, 40% leverage, debt to market cap at NAV sounds great, but when you're trading at a discount, all of a sudden you start looking at 50, 60% leverage. So
Jimmy,
in the case
if we were in a Twitter Spaces event, I'd be hitting the 100 button. I'd be doing the applause thing right now because you nailed it. That's the key here. That's the thing that nobody understands. There's no effing transactions happening.
None.
So you can't get a price point. You don't know what the cap rate is because nothing is changing hands. Everything that's happening right now is really based on assumptions. You know what they say about people who assume, right? Turtle, have you ever heard that expression, what they say about people who assume?
Yeah. They make an ass out of you and me.
Exactly. Like thank you. So, Jimmy, you bring up a fantastic point that the only sector that we have a price point bogey to focus on right now is self-storage because of the merger between Life Storage and Extra Space. That's the only sector right now.
And look at those comps, right? Look at that confidence that the buyers have in the long-term trajectory of that business.
It's the only sector that truly has a place to comp something right now with the price. So something interesting to follow. I look forward to having this conversation a year from now to see where office is a year from now and if anything has changed.